Welcome to the channel. My name is Jodie Knight. You can find my live portfolio over on eToro. The link is in the description below for that. But in this video here, we're going to talk about PayPal's price action. We're going to look at the daily chart, the weekly chart. We're also going to take a look at the open options interest. As well as that, we'll talk about my price targets, where I'm going to add, where I'm going to trim, all that good stuff, fair value and all that. On top of that, though, we're going to have a quick look at the general market, what's happening. We're going to look at the economic data from yesterday and what's coming today. And then also we'll take a look at some PayPal news if I can find any. If not, we'll find something else interesting to talk about briefly. All right, a lot to talk about. A lot went on yesterday, but we'll talk about that later on in the video. For now, let's just take a look at the PayPal chart. We're still really on play for this bigger cup and handle pattern. I mean, we could have the handle here and break out from kind of the yellow area, $94 or something. And that would be a pretty good move anyway. But I don't know. I would prefer it to happen a little bit higher at the 100 mark. I think we're still going to get quite a considerable pullback there. There's a lot of options interest in that area, and it's a big psychological level. So I'd still expect to get, the handle or whatever you want to call it, the primary pullback there. I think this dumpage is just a broad market thing. I don't know if this is going to qualify as what we need to get that to happen. The bearish divergence, though, has cleared out with this, so that's nice. Downside targets. PayPal's probably one of the only stocks I'm holding that hasn't had a nice bounce back in pre-market. It might still happen. I mean, we've got pretty good support here. We've got the volume shelf. We've got some historical points. If it doesn't, we will go back down to 81. I will actually buy more there. I'll rotate from some of the stuff. I'll find some cash somewhere because I really would like to own more. I do think PayPal's going to have a very good, very, very good 2025. But I've talked about it before. PayPal's not necessarily a long-term hold for me. I've been holding as a return to the mean. Initially, that was probably around $100, but the rate in which they're executing fundamentally has been really impressive. I might actually hold for longer than I anticipated. Currently sitting at about $124 as my overall target, but I think that's going to get lifted. So I think I could be in it for longer. But as we get closer towards that area and we start approaching those price levels, I will probably shrink it down to a 10% weighting initially, and then depending on how as the business rolls out, I might keep it around there, or I might shrink it down a bit if there's more opportunities. But towards the end of 2025, I think the market's going to be looking a bit ropey. So it's just a kind of waiting game, seeing what the macro gives us. But for now, despite what JP said yesterday, I'm pretty comfortable in the markets right now. I like my positions, I like the companies I'm holding, and I like where they're going. So targets to the upside on this one still, we just talked about it. The $100 is going to be a key area. Probably might take a little bit of risk off there, but not much. I'm already at not a huge weighting on this one. I think I'm around about 11% or something like that. So by the time we get up there, it's not much higher from where we are even now. Ballpark about 20%. So I mean, I might take a smidge off, but nothing major. I'd like to keep most of my weight until my fair value on this one, because I think it's a pretty steady, Eddie, reliable company. Put some good numbers and all that good stuff. I think sentiment just got a bit battered. Anything else we want to talk about on the chart? No, I think that was everything. RSI, we've cleared out that divergence. We got a lot of overbought. We've been getting a lot of overbought here, but we've had quite a nice steady grind up. It looks more aggressive than it was from this double bottom here. We had 63%. Now that does sound like a lot over about 95 trading days, but given what some of the other stocks in the market have been doing, Palantir, Tesla, those kind of things, I'm not really too fazed by that. Let's take a look at the weekly. Oh, I should point out I'm not on camera again today because I couldn't be bothered to get dressed again this morning. I'm too sad about all the market stuff, but I think a lot of that's going to be brought back up today as the leverage positions get back in. So yeah, we can see more kind of the cup and handle that I'm thinking about. I think we're going to get to 100, pull back, maybe back down to 95, or even possibly back down here again. But I still think PayPal's a steal deal. Yeah, I think it could potentially go all the way back up to kind of this 190, 200 range with the measured move from the cup and handle over 2025, but we'll have to wait and see. RSI here got a little bit heated, but it's pulled back down again, so not really concerned with that. Let's delete that line. It's rubbish now, doesn't really apply. All right, let's take a gander at the open options interest on this one then. So, I mean, we're kind of pretty much bouncing between the resistance and support there, which is no surprise. So again, market makers are going to step in at the support if it gets that low. So I don't know if I necessarily want to buy at this area just because of the potential upside, but we'll have a look. We'll see what money I can jiggle around. I'm pretty illiquid at the minute, so it's going to have to be a mega bargain in something to make me want to buy it and move stuff from other positions. So for this week, not too much. I mean, 90, we can see that's going to be a tough one to break. Given it's Thursday and with all the drama yesterday, I wouldn't say that's likely to happen. And PayPal's not really recovering too well pre-market. But, a lot of people were bullish. Where are they at now? Downside massive support at 60, but again, I wouldn't expect to see PayPal at 60 ever again. Let's push it next week. Now, I think these strikes and whatnot will change. We've got GDP data today as well, so there could be some shifting going on. But again, we're just highlighting these resistance and support areas. Look at the volume we've got here. So nothing really exciting seems to be likely to happen for PayPal in the near term. Let's take a look. January 2026. A lot of focus kind of 95, not too much at 100. People generally don't always pick the psychological level they want to be out before then, or at least be a little bit in the money. So I would expect to see some pullback. Maybe the pullback starts early at 95, but we'll have to wait and see. But that's interesting to keep an eye on. January 2027, let's see what the market's thinking of a couple of years out. Why it only goes up to 135. Sometimes this app annoys me, but you pay for a cheaper app. This is what you get, some quirks. But 95 again, a key area, and 130, 120. So long term, things are looking good. Maybe people aren't as excited about PayPal, but they never have been. So I've been in this from when it was like way down at the lows, and people really didn't give a hoot about it. I got it in the neck so much. PayPal's a garbage company. Nothing's happening. All that typical stuff. So I think I was buying most of mine in the kind of 50s range. And no one's really telling me I'm crazy right now because I've done quite well on it lately. But it was a real drag on my portfolio for a while. So maybe it will have its time fully in the sun, but again, ads business rolls out in 2025, so I think that's going to be the crown jewel. We'll have to wait and see. All right, let's news-wise for PayPal. Couldn't really find too much interesting. Scraped around on X for a little bit. Could only really find that PayPal's now the number one finance app, so no real shock there. They're starting to get back some domination, which is exciting though. Other than that, I did want to talk about, I put a couple of posts on eToro last night, just talking about, this sell-off is a little bit uncharacteristic. We need to zoom out, look at the big picture. Just put up a couple of nuggets that I found on X there for you. So someone just pointing out the second largest one-day VIX spike ever. During the 5 largest one-day VIX spikes, the spike was higher 1 month later every time. So again, this points to what I was talking about in my posts on eToro. You don't always have to buy the dip, but you just have to understand the market in general and what's happening. If you know what you're holding and you've got a good understanding of the macro, for me, I don't see this being a long-term issue. I'm pretty comfortable with the macro right now. I think if anything, it's calming down. We're getting on pace for something quite wonderful early next year. Other than that, though, Brad Freeman, I use him for a lot. He does a lot of earnings breakdowns, which are, if you're in a rush, they're pretty good to get to. But he just put on there, buy great companies, spend the time to make sure they're still great. So really, if you're holding great companies, just keep abreast with any current news, do their earnings calls, that kind of stuff. You don't have to have 400 stocks in your portfolio and pretend that you're listening to earnings. You actually have to listen to the earnings to understand what you're holding and where it's going to go. You can build out some models, you can go complicated, or you can just stick with something basic like a forward PE or whatever tickles your pickle. You just find a way of valuing companies and pricing them up for in the future, and you work around your own targets and stuff. And then he just goes on to say, trim when multiples get especially excessive, which I've been doing that with Tesla because I think it's going to do really well next year, but price is pulling forward a lot of those gains right now, and it can't really justify those prices in my mind anyway. I'm still super bullish. It's probably going to be $500 to $700 next year, but you've got to balance that risk reward, and in doing so I also do it on the flip side, like Brad says here, accumulate when multiples get especially compelling. This is why I end up with really big positions in PayPal and stuff when they're cheap, and they take a big leap, and I have to trim off because the position gets so overweight. And again, just zoom out. Always look at the big picture. The big picture is going to tell you what you need to know, where you're going. And if you're not too good at understanding it, there's tons of guys on X that give away loads of macro information for free. Probably should have had a list of those to hand, really. But yeah, if you don't like reading the economic reports yourself, some of those guys are pretty good. Although I would probably avoid Kevin. I think he's got a weird way of looking at some stuff. He's always really bearish when you should be bullish, and really bullish when you should be bearish. But whatever, it seems to work for him. So Wednesday, what a day in the markets. My portfolios, all of them got a bit slapped down. But again, we need to zoom out, look at the big picture. We lost maybe a month's worth of gain. So in the grand scheme of things, not a problem. And my gains so far this year, pretty much across all my portfolios, are still higher than my CAGR, which I think, I haven't checked this week, but it was sitting around 42%, and I'm still doing better than that per year return wise. So can't really complain about having a bad day in the market, especially when the pre-market bounce looks as juicy as it does today. But let's take a look at some of the data that we got yesterday. We could probably ignore all this mortgage data. We talked about that yesterday as well. Blah, 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 blah. So good stuff. Fed rate decision. We got a pause. I did say it's going to be a pause. We knew it was going to be a pause. The jobs data, the million mysterious jobs that vanished. No surprise there. Market started selling off, and then we had the conference, and yeah, it was hawkish, but he didn't really say anything that should have been a shock. We've had most of the same data that these guys have had, and all the speeches and stuff. It should have been not so much of a blindside, half expected. What has been shocking is the pace of the sell-off and the volatility. It's just, I suspect a lot of this is driven from leveraged longs being wiped out, which, given the pace of some of the market, makes a lot of sense. So there's leverage gets taken out, things look worse than they are, and then it's sort of like a ball rolling kind of thing. It builds momentum. I did make a couple of buys yesterday on some stocks, but I'm very cash poor now. Even my portfolios for crypto got annihilated. So we do what we can. I think it's important to always think about the big picture. Does one guy talking about the economy change your entire thesis on all the companies that you've spent hours researching? And does it change the rest of the data that we're looking at? We also had Japan had theirs. I think it came in at 3 a.m. Was it up here? Down here. So Japan rate of interest, they kept it the same. I'm more glad that they kept it as a pause. I was more worried about a continuation of the carry trade unwinding. I'm glad to see that's not happened, because I think the markets would have had an absolute heart attack today if that had. But we've got GDP today. That's expected to come in a little lower than the previous read, but it's not bad. So I don't think the world is as doomy and gloomy as the market told us to think it is yesterday. It's just, always look at the big picture, guys. Don't just look at that one hour long conference or whatever, however long he spoke for. That one chat with one guy doesn't define all of the data and all of the other stuff in the market. So work with what you know, not what is happening. Is the Santa rally going to happen still? It could, but I wouldn't bet on it. I think some stuff may run, some stuff might kind of capitulate a little bit more. Housing sector, I think, is going to not be very happy with this new move. Discretionary goods probably going to get battered as well. But, your more staple stuff might start running again. We'll have to wait and see. But today, what day are we on? Thursday, blah, 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 blah. We've got the GDP stuff. We've got some PCE stuff, corporate profits. Forecast at 0%. Interesting. Some more jobs data. More jobs data here as well. So again, we're forecasting more weakness coming in during a period when arguably we shouldn't be seeing that more employment data. So again, today's going to give us a bit more of a more wholesome picture of the market. The balance sheet runoff as well looks like it's probably going to continue, or it has stabilized the last few times. Inflation rate year over year as well, expecting a tick up. But inflation, it can come up and down. It's not going to go down in a straight line. It's just going to be... Sorry, that was Japan's. I don't know if I said that was Japan's, but yeah, interesting. That's a wrap. If you enjoyed this content, give it a like. I'm going to go brace myself for the Fed rate decision today. Share this with your mum, your nan, your dad, your dog, and I will see you Monday for CleanSpark and Bitcoin updates.